Welcome back to Virginia This Morning, live on CBS 6. The end of 2020 is in sight, but there's still plenty of time to make a number of financial moves that will help improve your retirement savings. Bill recently talked with a financial advisor, and here's what she had to say.
The end of the year is just around the corner. Now's a great time to take a look at your family finances. Top Richmond financial expert J.B. Bryan joins us to share 6 key financial year-end money moves to make. And it's not too soon to start thinking about it. Good morning, J.B. Bryan.
It's so good to be here. And it sounds crazy to have this as a topic. The year just started, didn't it?
Well, I'll tell you what, I think a lot of folks can't wait for the year 2020 to be over.
Well,
but so it's coming.
That's right. Well, they should thank you for this topic because what you do now in 2020 determines financially how your 2021 is going to be. Right. And I see that a lot where people, think about this year, next year, and that's just a little too late. So you got to watch Virginia This Morning.
Okay. All right, let's start with step 1, and that is to evaluate what's new and what kind of changes are we looking at?
Yeah, because did you start a family? Did you retire? Did you leave a job? Did you take money out of your retirement account? What did you do this year? We need to think about what are the tax consequences or how is that going to help you with your taxes? But let's just sit down and think about it. Sit down with the family, have the family meeting. What happened this year? What do we need to look out for and address before the end of this year and before 2021 begins?
I always learn so much from you. So you sent me some facts here. And the next phrase I've never even heard of. So obviously I haven't been doing it. Tax loss harvesting. I don't even know what that means.
That's because you're a winner. See, a tax loss is for people that lose. Winners don't know about this.
Oh, okay.
See, it's the practice of taking your losses and then you use those losses to manage the gains so that you can reduce your tax bill on the capital gains. But you got to lose in order for that to happen. So when and even you need to talk to your tax advisor about that, talk to your trusted financial advisor about what gains, what losses you've incurred during the year. How can you set up a strategy called tax loss harvesting to bring down some of your capital gains taxation through recognizing some losses during this year before it ends?
All right, so 2020 brought so much change. One of them was a new standard deduction. Tell us about that, please.
And it started a couple of years ago. It just eased right in there. And this year, each year, you have a slight adjustment, like the standard deduction basically almost doubled. It nearly doubled in 2018, and it ends in 2025 unless Congress decides to keep it. So because of that, many people don't need to itemize their deductions anymore. And some people are even, and this is a tip, they're doing the Schedule A, paying for a Schedule A to be prepared, and they're actually still taking the standard deduction. So think about that now. Look at your tax return from 2019. Are you taking the standard deduction? For joint filers, the standard deduction is now $24,800. You have to have a lot of itemized deductions in order to exceed that $24,800 in joint. If you're joint filers, married filing jointly. So organize now what itemized deductions that you have, because many itemized deductions were eliminated. Yeah. And it's an interesting time, Bill, because we could have a whole time on the fact that they've taken out expenses that you incur at home from your employer. They're not deductible. So a lot of people working from home are incurring expenses that they cannot write off because of this new Tax Cuts and Jobs Act from 2018. So be conscious of that.
All right. And then one other thing, we need to check the income tax withholding, know your total household income.
Yes, because many married people or people that have two jobs, they don't look at their incomes together. So when you do your tax withholding at the one job and your tax withholding at the other job, and you put your income together, you're in a whole different tax bracket, and they end up with a tax liability. So you can go to irs.gov and do a W-4 calculation. You can go to the W-4 form and do the calculator and put your entire household income in now in October and make sure that you are withholding the proper amount of taxes, and you can adjust going forward
All
before
right.
the year ends.
We got 1 minute left and two questions I want to ask, so we're going to have to go through them quick. Charitable contributions.
Make sure that it is important for you to give. So be strategic in your giving, because many charity, the contributions have to be, to write them off, you have to be an itemized, or you have to do the Schedule A that we were just talking about. So be aware of maybe hauling them together, putting all of your charitable deductions in one big year as a tax strategy, but talk to your tax advisor about your gifting strategy and set up one.
All right. And the last question, evaluating your retirement account contributions.
Give more to yourself, right? Invest in yourself more. What better way to reduce your taxable income than to put more money into your retirement plan that may be available to you at work? If you don't have one at work, it's time to talk to your financial advisor about setting up your own individual retirement account.
We all know we should learn something every day, and I learn something every time I talk to this lady. Thank you so much.
Thank you. Thank you.
JB Bryant offers free weekly money seminars and webinars every Wednesday and Sunday evening. You'll find a link for more information at WTVR.com/VTM, and stay tuned. We will be right back.